Good afternoon, and thank you for joining us for this installment of Epic Insight. This is Brian Lenz, Director of Sales and Strategic Partnerships here at Epic, and I'll be your host for today's call. As some of you may have seen through our recent press release, we're very excited to be partnering with Stadion to offer their new StroyLine solution, and we're pleased to have them join us today. We at Epic see technology and the demands of participants evolving more rapidly than ever, and our mission, as always, is to make sure that you're armed with the tools and resources you need to stay competitive. To that end, and to chat more about what they bring to the table to complement your retirement plan offering, we're joined for the next half an hour or so by three distinguished gentlemen from Stadion. We've got Brandon Lowe, Todd Lacey, and Dave Lukuski. First on the mic is Brandon Lowe, who joined Stadion in 2007, where he currently serves as the VP of Business Development. He's dedicated to working with retirement advisors, platforms, and TPAs to provide solutions that enable them to better serve their plan sponsors and participants. Your line will be muted throughout the call today, but if you have any questions you'd like me to run by the Stadion team, just enter those into the GoToWebinar questions panel there, and we'll field those at the conclusion of the call. With that, I'll turn it over to Brandon.
Well, thank you, Brian. It is an absolute pleasure to join you on today's call. We are really excited about this relationship with Epic, and Brian, as you know, but those on the call probably don't. We've had a relationship with Epic for a very long time, and this is really just talking about a new product that we're coming out with that we think is going to make a huge difference in participants' lives. And so we're excited to talk to you about that today and about how we can partner with you in the field. And so before we go into what the product is and how we're participating with participants, I wanted to tell you a little bit about who Stadion is. We started money management back in 1994 and have grown to managed accounts inside of 401ks with almost $4 billion under management and over 10,000 plans that we work with. Typically, a plan is a good plan for us is a smaller plan under $10 million is what we've worked with up until this point, which we think fits well with the market that we've been working with at Epic. But I'd like to introduce David Lukuski, who is our manager of sales teams, has been around for over 20 years managing sales teams in the financial world and has been with Stadion for over 5 years. And then we have Todd Lacey, who's our Chief Business Development Officer. He's been in the industry for 20 years and was an advisor for 7 of those years, and joined us last year to help us continue to build great relationships. And so I'm excited now to pass the bar to Todd. And Todd, explain to us a little bit about Stadion's new offering, StroyLine.
Sure. Thank you, Brandon. Good afternoon, everybody, and thank you to the Epic team for allowing us to be a part of this, and thank you for the partnership. I think all of you on the phone know what a fantastic organization Epic is. It's our honor to work with them, and we're really excited about kind of this new stage in our relationship. So I thought what I would do is first start kind of high level and talk about kind of where we are as an industry with respect to helping participants invest their money. And we can jump to the next slide here. So I think all of us on the phone are aware that participants need help. Years ago, we decided we would offer participants lots of funds for them to choose from in their 401k plan, and we provided tons of education, as you all know, and were probably a part of. I was as well, and I think what we found is people didn't want that many choices, and education wasn't that effective. So generally speaking, people are lost and they're not sure what to do with their 401k investments. And these are just some statistics to kind of reinforce that fact that many of you maybe have seen. But 56% of people say they're not confident that they can make 401k investment decisions on their own. 70% would like personalized advice. 58% wish there were an easier way to know how to choose their investments. And 44% feel a lot of stress about choosing the right investments for their 401k. So we all know this. People don't know what to do. They're not comfortable with this. No one's taught them in school about this. And at the end of the day, most retirement plan participants just want you to either tell them what to do or actually do it for them. So again, a lot of us have known this for a long time. So next slide. What has been our kind of industry solution to that? Early on, it was asset allocation funds, and that evolved into target date funds, which if you jump to the next slide, they've been the go-to solution. They have really served a purpose, and they've been incredibly popular. Just a few stats to kind of demonstrate that. Jump back real quick. In 2016, just shy of $60 billion went into, those are net inflows actually, into target date funds. And the total assets under management at the end of last year was $1.16 trillion. So I think by any measure, these have been one of the most successful investment vehicles probably of all time. And we believe that these are great options, and they're much better than folks trying to do it themselves. The fact that you can kind of set it and forget it, you pick your estimated retirement year, put your money in, or the company defaults you in, and really you don't have to look at it again, and your allocation gets more conservative as you get older. So we all know how these work, and I think we'd all agree that they have been meaningful and important. But we also want to point out, as we get to on the next slide, some limitations with target date funds. And I think those of you like myself that go to a lot of our industry conferences are probably hearing more discussion about, the next phase of investment solutions and maybe some things to think about as it relates to target date funds. So number one, and this is probably the biggest limitation, is that when you're in a target date fund, everybody's treated the exact same age or exact same way based on their age. So if Brandon and I are the same age, we essentially get allocated the exact same way. And when you step back for a second, that seems a little bit silly in some ways. If you ask, those of you who are advisors on the phone, if you manage, retail money or individual money, probably when a prospective client walks into your office and you start talking about how they should invest their money, I'm sure you ask more than just how old are you. You'd never do that outside of a plan, yet that is what we do inside of a plan. Target date funds don't consider your risk tolerance or your other assets or anything. So we view that as a one-size-fits-all solution that really is somewhat limiting. Also, a lot of target date funds use just one fund family. Actually, most are proprietary, where XYZ investment company offers only XYZ funds under the hood inside a target date fund. And I think it's very rare that one fund company is the ideal choice in every asset class, with the exception of potentially an index-based target date fund. I think that's possible. But as you get into active management, it's very difficult to kind of have one fund company that's going to do the job across all asset classes. The third bullet there, differences in equity allocations as investors get older. Dave's going to point this out in a few slides. They're, depending on the target date fund you're in, the glide path differences are significant. And so there are giant swings between equity exposure across the various target date funds out there. I think we saw that, those of you that were lucky enough to be part of the 2008 correction, we saw a lot of 2010 and 2005 target date funds at that time lose 30-40% because they were significantly invested in equity despite being a short-term investment vehicle. And we're starting to see now more target date funds get more aggressive to sort of take advantage of the extended bull market, and we view that as pretty risky. But either way, target dates really force advisors and plan sponsors to look hard at a glide path and ultimately pick one glide path, which I think is a limitation. And in terms of the expenses of target dates, they're all over the board. There's certainly some very inexpensive ones out there, but many of them are, well over 70, 80 plus basis points. So they're not necessarily the cheap option. And oftentimes they're misused. I would see this a lot with participants when I was an advisor. Is I would open up someone's account, take a look at it, and they were in 5 different target date funds. They felt like they needed to be diversified. And we all know that a target date fund in and of itself is supposed to provide that diversification. So they can be misused. Another way they're misused is some people feel like if they want to be more aggressive, they will pick a date that's farther out, or if they want to be more conservative, they'll pick a closer date. That gets complicated. So most people do have a tough time figuring out how to use them. And then finally, there's a fiduciary consideration. Most target date managers are not a participant level fiduciary, so they really don't take accountability or responsibility over how they're investing their money like a managed account can. So if you want to jump to the next slide. So let's look at managed accounts. This is sort of the next iteration here of do-it-for-me investments. Managed accounts have been out for a long time, but it's still a relatively small industry. And some of the legacy concerns with managed accounts within retirement plans has been they're expensive. Some of them charge 40 to over 100 basis points on top of fund expenses. They can be complicated, long questionnaires, a lot of steps to enroll, make it difficult. Participants don't enroll in a lot of cases because if they're just offered without any kind of enrollment, meeting or anything like that, they require action, which most people don't do. And a lot of times they're just an asset allocation of the funds in the plan. So there's no real active management, yet they're charging a fee. So those are some of the concerns. And this is where we'll pivot into StroyLine. You can jump to the next one. StroyLine is Stadion's managed account product that's available on Epic's platform. And really what we felt like or feel like we have done is kind of taken the best attributes of target dates and the best attributes of managed accounts and kind of pulled them together. So this is a managed account product. We've also referred to it as a personalized target date solution. And characteristics, Dave will jump into this in more detail, but there are multiple glide paths. So that addresses the single glide path issue that I mentioned, over 400 different allocations that someone could be in. It's a lower cost managed account. The version that we have available through Epic, all in, including our management fee and the underlying investments that we use, is 59 to 62 basis points, which is less expensive than your average actively managed target date fund, which is at 71 basis points. So this enables you to get in a highly personalized investment vehicle managed for that participant at a price point lower than a target date fund. We use Stadion CITs, which inside of those are Spider ETFs. So this does allow participants to access ETFs, which are somewhat uncommon, as you know, in retirement plans. We've got a great, easy, in-person mobile enrollment platform. We take, kind of blend human beings and technology to get people into the program and get them customized. And then we do act as a participant level 338. We take responsibility for the investment decisions that we make when we manage an account. So with that, I'm going to pitch it over to Dave to kind of run us through the rest of the presentation.
Thanks, Todd. Appreciate it. Great setup, and really appreciate the opportunity to get a chance to really present this from a product standpoint to help you really understand what it is and how it functionally works for the participants in a plan. To do so, I just wanted to kind of piggyback a little bit off where Todd was going about this being a personalized target date solution, recognizing the success of those and what the managed account solution really provides you. If you look at the chart you're looking at, I'd like you to look through the colored lines there and look at the gray background. What the gray background represents is some of the research that Stadion had conducted, where we looked at all the popular target date funds in the universe out there, and we kind of mapped out their collective glide paths And we refer to this as the glide path river, the universe of target date funds. And then what we did is we wanted to really kind of take a little bit of a deeper look. And what we noticed is for the 50-year-old person, which represents that arrow there, that's the gap of equity exposure and risk amongst the target date fund families out there vary greatly. It's really interesting to consider that depending on which target date fund you use in a plan, participants can have the equity allocation as little as 49% to as high as 86%. And it really kind of just begs the question, which is the right target date fund to select for a plan and all the participants? And I think that's really the value of our story, and that is why pick one? Why pick one target date fund when you can provide a personalized solution that can tailor a target date strategy for each individual participant based on the risk tolerance and unique characteristics and their retirement objectives. So if we look at how we do that, I think the first thing is not understanding that what personalization is. It goes far beyond just age-based investing or an estimated retirement age. The things that we look at risk tolerance. There's a risk tolerance questionnaire that we'll show you. We also consider current age, outside assets, and individual objectives of each participant. When we gather that information, what we do is we provide a personalized asset allocation built with spider ETFs, so it's very reasonably priced. And really the beauty in this is there's really no cost to the plan sponsor. Only the folks that are interested in this use it, and the people that use it pay for the service. The only thing you may want to, that's as a participant choice option where we are not the QDIA, but you can always make us the QDIA, and we obviously would welcome that. The next slide talks about making the most of retirement. Our goal really is to make this simple and easy for participants. There's no need to kind of sit at a booklet of possible investment options and run through each and try to pick the best allocation for each participant trying to pick their best allocation. And the other thing we're trying to do here is improve outcomes. We believe that folks that utilize this service will get a suitable and appropriate allocation, which should help them weather some of their emotions through market volatility, which will lead to better outcomes. We've all seen statistics like this. This is a really simple bar graph that points out that the average asset allocation investor just underperforms, and that's driven predominantly by investment decisions during times of duress. People just not quite sure what to do, so they do nothing or do the wrong thing at the wrong time. And lastly, as it was pointed out from a product standpoint, is we are a participant fiduciary. We take full responsibility for discretion inside the participant accounts, which means that we make it easy for the advisors, nothing they have to do, and we collect all the information and make all the investment decisions across the board. And we do this through our mobile-friendly technology. When we talk about support, I think this is an important point. The mobile-friendly technology really is simple. In less time it takes you to drink a cup of coffee, you can create a profile, answer a risk-based questionnaire, and receive a personalized retirement allocation built with low-cost ETFs. So it's really nice from a functional standpoint, a timing standpoint. Technology and asset allocation and fiduciary are all really high buzzwords in the industry, and really that's what Stadion has done with StroyLine, as we sit at that intersection of those three topics. The other thing is we put a personal touch into this. We prefer, and if you desire, we'll be more than happy to take some of our many advisor consultants. There's a total of 20 out there nationally in the field, and we're more than happy to participate in enrollment and education meetings to introduce StroyLine to participants as well as plan sponsors. I wanted to also focus on the support. We do accept fiduciary responsibility, which means we believe we should communicate regularly and on an ongoing basis with the participants. And we'll give you an example of that, but the support doesn't end just with email communications. There's also live phone support. People can call us at any time during business hours, and we can answer detailed questions about their accounts and even investment related questions as well. The next slide, which is slide 15, really is a setup to what we're doing here. As a managed account solution, we sit alongside the plan lineup. And I think that's an important thing to understand. When you look at the typical plan that's out there today, the typical small market plan, what we have is we have a plan lineup fiduciary offering really good investments for the participants to select from, and there's typically a TPA service. The help kind of ends there unless the advisor is taking on some type of liability to help those participants. When you think about financial engines, and I believe everybody is familiar with them, what they did is they took this very typical structure and they added one component, and that was the component of providing personalized advice to the participants. And if we go to the slide 16, really that's all we're suggesting. We're suggesting that we offer another alternative to participants when it comes to their investments, and that is the opportunity to receive help or advice with personalizing their allocations and making that somebody else's responsibility so the participant doesn't have to. If you go to slide 17, we're going to dig a little bit into what we're doing and why we're doing it. We're clearly trying to help participants, but the why is really important to understand. We're not interested in doing this just to help the participants. We're also looking to build strong advisor relationships. We do this with the advisor, not instead of the advisor. And there's two really important things that is a direct benefit to the advisor when using our technology. Number one, when the participants log on to their dashboard, which they can access 24 hours a day, we always predominantly display the firm and advisor for the plan. Our goal is to promote you. The next thing that we will do is, because we are gathering all this client and personalized information to provide suitable allocations, we have data, we have information on the plan participants, and so long as the participant does not opt out from us sharing this information, which is a very low percentage, 98% of participants allow us to share, we can provide a participant report back to you, which really shows you who is the folks that have personalized. We have their age, salary, contribution rates, the StroyLine AUM, income replacement ratio, and then the magical outside assets that we capture when we're building our personalized allocations. This has turned into a really valuable report to our partners and great for helping you grow your business and build your book of business as well if you're interested in rollovers down the road and increasing the number of relationships that you have. The next slide really kind of talks about our technology, and what I really want to focus on is the benefits of technology. Technology is a fantastic resource, but really what technology should do is it should increase the service levels or increase participant experience, but it should also really limit the amount of work that we're asking the people that make our technology available to do. Everybody has limited resources. We are not going to, suggest a solution here that says, hey, we need a bunch of your time, a bunch of your back office support to make this possible. Through our technology solution, we do it all. It's essentially a very efficient turnkey program. All you need to do is make us available on the plan, introduce us to people, and have people enroll. And once they enroll, it's really kind of taken over from there. And our job is to take full responsibility as a fiduciary, make your life easy, increase the value that you're providing to the plan, and then keep you updated on who the participants are that are using our services. If you go to the next slide, I just want to practically walk you through what the participants see. The first thing that's going to happen is they're going to create a quick profile. As said earlier, that just takes a couple minutes, and then we walk them through a very simplified risk tolerance questionnaire, which is necessary for us to deliver an appropriate allocation. Just so you know, this was created by a PhD in economics and behavioral finance, somebody we teamed up with, and it's really also simple. You don't need to sit there and think long and hard about it. There's a sample question here. I don't mind taking some risks with my money to increase the amount that I have. That's very typical of the type of questions that are in this quick 9-question survey. And then the last thing that you get is when you're completed with that survey is you get your profile personalized to you. It tells you what type of investor you are. In this case, it's an aggressive investor. It shows you what the allocation is and what the glide path is. And then there's some other quick planning tools that can be used to either increase contributions or calculate replacement ratios or estimated retirement wealth at retirement. As said earlier, communications is always something that we will take serious as a participant fiduciary. And I just wanted to point out the type of communications that we provide. It's not the typical black and white letters that you get, in 8.5 by 11 pieces of paper in the mail. These are delivered electronically to the participant's email. And they're also communications that are really driven to improve outcomes. In this case, we're suggesting that if you save a little bit more, you can really grow your retirement savings. And we'll send things like this out on a quarterly basis. But perhaps my favorite type of communication we do are ad hoc or market-driven events. What you're looking at there is our Brad Thompson. He's our Chief Investment Officer. Outside of delivering a great smile, he also delivered a market update here recently as we saw some real volatility in the market, which may have had people concerned about what was happening. So this is really a robust communication effort and an ongoing communication effort, which we believe also hopefully adds value from a service standpoint to the participant. So hopefully that gave everybody on the line here a good understanding of what it is that we're trying to do. We try to keep it high level. And it's probably a good time to see if anybody has any questions, Brian.
Yeah, thanks, Dave, and thank you, Todd and Brandon. We'll open it up to a few minutes of questions here. If you do have something you want to run by the team, feel free to enter that into the GoToWebinar questions panel. While those are coming in, Todd, you mentioned that one of the challenges of these managed accounts is kind of that they were too complicated to gather the information. Can you expand a little bit upon your enrollment support services and kind of success stories there and actually gathering the information needed from participants to make this engine work? I think Dave just did a nice job with how simple the questionnaire is to boost that uptake, but can you talk about kind of the in-field support as well?
Sure, and kind of as I mentioned earlier, we think the magic here is combining technology with human beings. I think either one of those as a standalone offering doesn't always work that well, but when you pull those two together, it's really effective. And so we have the mobile first experience for someone to enroll, and Dave showed some screenshots of that. And by the way, we're happy to demo that for anybody on the call that's interested, but very easy process. In 5 minutes, someone can get a customized portfolio for them, enroll, terms of agreement, it's all right there. But probably most importantly, we have folks throughout the country that do on-site education and enrollment meetings, which, as I talked about, that is necessary to get people comfortable, answer their questions, and then ultimately get them enrolled in the service. So for any of you that have, clients with multiple locations or maybe don't have a lot in terms of enrollment resources, you can leverage us for that. We do commit a lot of energy and resources into that because we know it's so important. So does that answer it, Brian?
Yeah, and I think that last point is important as well. I want to reiterate some things that you've said throughout, is that this is really designed to complement what our partners on the phone are doing already. Stadion is not looking to take over as the advisor on the plan or set the plan's lineup. There's that clear and distinct line of, while the folks on the phone may be fiduciaries at the plan level, Stadion is offering, when you want it, the option to take that over at a participant level to really give our partners more reach. I think almost everyone on the phone would admit that they're probably not able to spend as much time as would be ideal with every participant in every plan they service. I think this is a great way to kind of extend that reach and give those participants a better outcome. And certainly the enrollment is one piece of that, and the ongoing experience is another. But everything that we're talking about today is designed to complement and extend the practices of those of you on the phone. I don't know if Dave, Todd, you want to add to that at all, but I think that's a pretty important point.
Yeah, I'll add something to that, and I'll just share a conversation with you that I was having with the head of a regional broker-dealer, and when he was looking at his plans, one of the fears or concerns that he felt that he had was the advisors on the plans had really good relationships with the business owners, and often cases were, kind of offering a wealth management service, understanding the outside assets of the business owner and the retirement assets of the business owner. And they felt like the key people in the plan were getting this level of advice. And he was viewing this as kind of a technology solution that could offer advice without requiring a lot of support of the advisor to give every participant the option of help. So to your point, it's a complement. We look not to compete with you. We look for ways to work with you to provide value to the plan and keep you focused on the things that you really want to do.
Great. Thanks, Dave. And one more kind of question that came in relates to just age demographics. Are you seeing any trends in millennials uptaking this or certain age segments embracing this more than others? I mean, as would be no secret to everyone on the phone, younger generations are growing up with technology and used to personalized everything. Are you seeing that kind of resonate through this program as well, or is it kind of across the board you're getting people to engage and go through the questionnaire?
Yeah, I think, Brian, and we have sort of analysis that shows this, but certainly the younger generation is more comfortable with technology, but I think everyone's got a phone, and because that's kind of how we generally enroll people, we walk them through it. It's very easy. So I think one thing that transcends age and that we see across the board is what I talked about at the beginning, that whether you're 25 or 65, you don't know what you're doing as it relates to investing your retirement money, and you want help, and oftentimes want someone to do it for you. So yeah, it does take age out of it a little bit, actually, where we find, especially when we go and do these meetings, we get well north of 50% of people that enroll, because again, the sentiment across the board is someone help me do this.
Oh, good stuff. Well, I think that'll do it for today. So thanks again to Stadion, and thanks to everyone on the phone for joining us for this Epic Insight webinar. For anyone who wants to learn a little bit more about the StroyLine offering, there are some handouts available to you to download now via the GoToWebinar panel there. And of course, we'd be happy to connect you with the Stadion team or to get you up and running. So please do reach out to your Epic sales consultant or relationship manager so that we can make that happen. And we appreciate everyone's partnership and look forward to seeing you next month.
Thanks so much, everybody.
Thanks, everyone.
Thanks, Brian. Thanks, everybody.